All right, folks, today we're talking about unrealistic IUL illustrations and why they are very unnecessary. My name is Chris Simpson, sales director here over at Oak Tree Brokerage. I am joined by Trevor Mooring, one of our life specialists, our excellent life specialist here at Oak Tree Brokerage. And folks, there's a problem, and there's a problem in this industry, and it's been plaguing the industry for years. Many advisors are motivated to show high IUL illustrations, and it's completely understandable why they're doing this. They're showing projections that show the highest cash value, the highest income, the highest target premiums possible compared to other carriers. Unfortunately, the problem that this is creating is that it's creating an unrealistic set of goals for the client that they're likely never to achieve. Trevor, as someone who's running these IUL illustrations every single day with many, many agents, what are you seeing with this and how is this affecting clients?
Yeah, I mean, I think essentially it's kind of taking the easy way out of the selling, right? It's easy, especially in a competitive situation. A client may be shown, 6% on an illustration and you want to show them 6.25, or a carrier that's showing that, right?
Right.
Which is great, but the problem with it is we know that when we run these illustrations, the minute you hit run, it's wrong. It's just that. It's a projection.
Absolutely.
It's an illustration. So what I like to talk to guys about is getting away from what's on the paper. The paper is not that important. What you should be selling is the concept, right? You're going to talk about all the things that an IUL can do and all the things it will do. Living benefits. It can provide that tax-free income in retirement, right? So talk about the tax savings, things that every IUL has. And then it doesn't matter if you're showing 4%, 6.25. It really doesn't matter how conservative you are. If you're talking about that and the other advisor is not, and you're explaining the difference in the illustrations, that is just an illustration, you're gaining their trust.
Right.
You're actually being an advisor. You're not just trying to sell that product to that client.
And I think you made a really good point there. You're talking about what the product absolutely will do, not what it might do. Because like you said, every illustration from day one, when you run it, is completely wrong. They're hypothetical. They're most recent 10 years. They're the most favorable 10-year period. I mean, you can actually input the amount of percentage that you want to see on some illustrations too, which can lead to a lot of deceiving type concepts. But I love what you mentioned there, because you want to sell to what these products absolutely will do. And what they will do is they will provide a tax advantage death benefit. They will provide living benefits for chronic illness, critical illness, terminal illness, those types of things. And those features do so much compared to other financial products. I think sometimes as agents and advisors, we just get caught up a little bit into that illustration game. And it's kind of understandable. You're showing clients a number, and they just got shown this number by a competitive advisor. You want to beat that, right? I mean, you want to. The motivation's there, but we can't get sucked into that game. And for that reason, there's a lot of regulation that's now starting. Your AG 49A, which took place several years ago, AG 49B, which most recently took place. Can you speak about what those changes are and what they're doing?
Yeah, really what it is they're trying to make it a level playing field across all carriers, across all illustrations, trying to show that illustrated rate and basically have a cap on that illustrated rate, right? And also make things go back to a baseline of the S&P 500. You were getting a lot of carriers coming out with their proprietary indexes, and they had bonuses they wanted to put on things, and just a lot of stuff happening at every different carrier, right? There wasn't a lot of standard.
Right.
And so basically what AG 49B has done is it's come in and said there should be a standard. Let's get back to the S&P 500. Let's get back to showing a realistic rate, right? But the thing, that I feel like I'm having a lot of conversations about that specifically is just pointing out that only has to do with the illustration. It really has nothing to do with the product itself. It's not changing the product. It's just changing how you can present it to a client.
I see.
So that's the big thing to remember, I think, with that is again, product isn't changing. They're performing the same. An IUL can still do what an IUL can still do. And it's absolutely going to do what it absolutely is able to do, right? Those things you focus on that it will do.
And I feel like in this day and age, You and I have discussed this. There's a lot of TikTok videos out there. There's a lot of social media videos out there of what these products can do. And it's to a point where my wife, who does not pay attention to this side of the business at all, is asking me about IUL and hearing about these amazing things that they can do. And it makes me a little bit nervous as a person who actually sells these things, who's actually licensed, that we need to be careful with what we're putting out there. We need to be careful with the type of information. I think you mentioned something good, like those bonuses. For folks who don't know, what were those bonuses doing that were in these indexes? Why has that become such a big topic of issue?
Again, it's just setting that realistic expectation that there may be 0 years, right? That happens.
That's what happens.
That's life.
That's the
That's
market.
normal,
Yeah.
right? And with those bonuses, some carriers were able to illustrate ways where it essentially looked like you weren't going to have any 0 years.
Yeah, so with those bonuses, I feel like a lot of those IUL bonuses that they were really going to those proprietary indexes, right? They were going to those proprietary indexes, and then you would have a carrier call you and say, hey, this index is great. It's with blah, blah, blah. And you guys need to be running it at blah, 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 because this is the best index in sliced bread, right?
Yep.
So there was usually a bonus attached to those indexes. And now with the game, it's kind of changing a little bit. You see a lot of those companies, as you mentioned, putting the S&P as the primary index as you run that illustration, which I find really interesting. Probably something easier for the client to understand, too.
Absolutely.
One thing we haven't really mentioned is just, what do you look for in a carrier? We talked about with a carrier, you want to talk about what the company will do, not what it might do. But it really comes back to renewal rate history. When I'm looking at a carrier, I want to know that we're going to get this client at a 12% S&P cap, and they're not just going to drop it to an 8% cap the next year. Can you talk about renewal rates and what you really want to look for in a carrier, maybe outside of obviously illustrations? What can we look for?
Yeah, I think that you talking about the setting the cap and not dropping that right away, that's a huge one, right? You want to look at that history, but I also think the way living benefits pay out, right? Do you know how much the client's going to get if they have a critical, chronic, or terminal illness, right? That's a big one as well. And then, of course, looking at things like cost of insurance, right? Fees and all that. We know IULs are fee heavy in the beginning. So really doing the math and figuring out cost of insurance, right? That's a big one too. But if you don't want to get into all that, then really those living benefits, the caps that you were talking about, I agree with you on that. Those can be big.
And I feel like these AG 49B changes are really going to create more creative products almost. They're going to have carriers who maybe didn't have additional benefits like living benefits. They're going to up their game a little bit. It's not just about that illustration performance. What can it do for the client while they're still living?
I think to that point too, you'll also, and this is an assumption, but I think you're going to see more riders and things come out as well, right? Whether it's guaranteed income or, no lapse protection types things when you start taking income from your IUL. Right. So I think we're going to see additional benefits like that come out that's going to set one product aside versus another.
I like that. Absolutely. And, to wrap things up here, the entire goal is what's best for the client at the end of the day. Whether you're a marketer running an illustration for the advisor, whether you're the advisor actually presenting it to the client, it's always about what's going to be best for that client. I want to make 3 points here, and have you touch on some of these too. Again, permanent life products, they're the only financial products out there that really provide those tax advantage benefits. You can have LTC riders, you can have chronic illness, critical illness, those living benefits with it. These things can be tax advantage for your clients. You can take loans and take tax-free loans in the future as well for supplemental retirement income. These concepts, those are the conversations that we need to be having with our clients. We want to use those carriers, as you mentioned, that have a history, a demonstrated history of renewal rates, of integrity behind what they're doing. And then we want to use those compliant marketing and sales tools. We have a lot of sales systems. I know you're talking all day about the different IUL marketing sales tools and systems that we have. Well, Trevor, I appreciate your time. I really think at the end of the day, we need to stay focused on what these products will do for our clients, not what they might do. And just remember, illustrations, they do not make the sale here.
Absolutely.
They are not what's making the sale for our clients.